Now guys, we go ahead and understand the rule 10CA. Rule 10CA basically provides for, now let me just share the screen of the rule from the bare income tax rules only. Now rule 10CA is basically about computation of arm's length prices in certain cases, right? Now what rule 10CA sub rule 1 says that where in respect of an international transaction or an SDT, the application of most appropriate method referred to in subsection 1 of 92C results in determination of more than one price, then the arm's length price in respect of such international transaction or SDT shall be computed in accordance with the provisions of this rule. So when you have more than one ALP in your data set, then you are required to compute the arm's length price as per the provisions given under this particular rule, that is rule 10CA. I'll just move on to the mind map to understand further. Now, if I break this entire rule in three parts, right? So, first is when we are dealing with first proviso to sub rule 2 and sub rule 3, that is which is applicable in case of RPM, CPM and TNMM. I would request you to also, when you are going through this set of provisions, not during the practical part, but during the provisions part, have the copy of that particular rule or a section what we are referring and what we are discussing under this, but under any of the particular video, right? Now I'll just open that first proviso. What first proviso technically to sub rule 2 and sub rule 3. So which says, so I have broken that, if you just go ahead. Now let me just do one thing. Let me just open from here itself so that it will be easy for you to understand. Now what we are, so rule 10CA sub rule 1, we studied that in case of more than one ALP, you have to follow the provisions as per rule 10CA, right? Now what rule 10CA sub rule 2 says? Sub rule 2 says that a data set shall be constructed by placing the prices referred to in sub rule 1 in an ascending order, and the arm's length price shall be determined on the basis of the data set so constructed, provided that in case referred to in clause 1 of sub rule 5 of rule 10B, where the comparable uncontrolled transaction has been identified on the basis of data relating to the current year, and the enterprise undertaking the said uncontrolled transaction, that is not being the enterprise undertaking the international transaction or the specified domestic transaction referred to in that sub rule, has in either or both of the two financial years immediately preceding the current year undertaken the same or similar comparable uncontrolled transaction, then the most appropriate method used to determine the price of the comparable uncontrolled transaction or transactions undertaken in the aforesaid period, and the price in respect of such uncontrolled transaction shall be determined, and the weighted average of the prices computed in accordance with the manner provided in the sub rule 3 of the comparable uncontrolled transactions undertaken in the current year and in the aforesaid period preceding it shall be included in the data set instead of the price referred to in sub rule 1, right? Now this also has certain provisions, and you can read that provisions once when you get time. Now let me just make it easy for you, right? We are here for practical understanding, because the law has been worded at first instance it may seem confusing to you. So what I have done is I have broken this entire first provision, and I have also broken down this entire sub rule 3. Now what it means to say, now let me just move to the screen. Now what it means to say in a simple language, that if data for comparable, so now first we need to understand that this will be only applicable when there will be RPM, CPM and TNMM. So when you are dealing with margins, technically gross margins and net margins, right? When you are dealing with the methods which use margins, then appropriately you need to construct your data set in the manner in which I have provided, right? Now if the data for comparable transaction is available for current year, then current year data and prior 2 years of data is required to be taken into consideration. So if you will read that rule, you'll come to know that it says that if the data for comparable transaction is available for current year, then when you have to also use the data of current year, and apart from that you have to also use the data pertaining to 2 prior years, right? So that is what it says. Now the next thing, that if the data for comparable transaction is not available for the current year, so you don't have data for the current year when you are determining the comparability analysis under RPM, TNMM or CPM, right? If you don't have the comparable entities data for current year, then data pertaining to 2 years, that is prior 2 years, is required to be taken into consideration. Let me just make it here, prior 2 years. So 2 years, or let me just 2 years prior to current year is required to be taken into consideration, correct? So now in case if you are doing a benchmarking analysis for financial year 22-23, so first the basic provision said that you need to analyze the data of 22-23, but if the data is not available for 22-23, then you have to go back to 21-22 and 20-21 and you have to take that data. So that is what this rules and provision says. And the third part is that once you collect that amount of data, then you have to do the weighted average to be derived and to be included under the data set. So that will be your arm's length margins, right? So now let me just show you this with a part of, show you this with a help of example which I showed you in the first part. Now, okay, so as I shown you here that how a comparable data set looks under RPM, TNMM. So what that particular rule said, that if the data, so in this particular example, the current year is financial year 2021, right? So if that particular data is available for 2021, then you have to go ahead and you have to also capture the data of 1920 and 1819 to do the analysis, right? Now, if suppose in second point, that is Shibora machine, in case if this data pertaining to 2021 was not available, then you should have take FY 1920 and FY 1819 and appropriately you should capture those data. Now then further what that rule says, that whatever data that you have taken in this entire 3 or 2 years, that you need to do a weighted average, right? This is what it says. Now what is weighted average? Weighted average is, so suppose if this is operating margin or operating cost, so this is operating profit data divided by operating cost, right? Operating profit divided by operating cost for each and every year. So what would be the weighted average? Then what I will do, we will see in the practical case also how we arrive at a weighted average, but just for your reference right now I am telling that we will compute, we will take the total of 3 years of operating profit, we will divide that by 3 years total, 3 years cost, operating cost. So that accordingly will come to a weighted average operating margin, right? I hope this clarifies. This is just for your sake of understanding. We are going ahead with the practical part also. Now, so this is what that first proviso to sub rule 2 and sub rule 3 meant, and which is only applicable in case of RPM, CPM and TNMM. Now, sub rule 4 will be applicable in case of CUP, RPM, CPM and TNMM. Now, let me just also show you sub rule 4 so that you can understand what rule number 4 says. Now, sub rule 4 says that sub rule 4 of rule 10 CA, we are on 10 CA, right? Now, where the most appropriate method applied is a method other than the method referred to in clause D or clause F of subsection 1 of section 92C. So, clause D was profit split method, clause F was other method, right? 92C clause D was profit split method and clause F was such other method. So now we'll come to again that rule. So where the most appropriate method is applied is a method other than the profit split and other method, and the data set constructed is in accordance with the sub rule 2 consists of 6 or more entries, then an arm's length range beginning from the 35th percentile of the data set and ending on the 65th percentile of the data set shall be constructed, and the arm's length price shall be computed in accordance with the sub rule 5 and sub rule 6, correct? So previously there could be a concept that where we have to take the weighted average prices and then we have to compute the arithmetical mean of that particular data set, right? As we saw in the example here, I'll just open that again. Okay. So if you see here in this particular example, what we have done is there are first of all 4 number of comparables here, right? So what that particular rule which we referred right now, it says that if you are using RPM, TNMM, cup or CPM method, right? And you have more than 6 comparables. So now you see the difference here. If there were less than 6, then I have computed this average of weighted average price of margin of this comparable companies, right? But if there are more than 6, then I have to arrive at an arm's length range, and that arm's length range will begin from the 35th percentile of the data set and it will end on the 65th percentile of the data set. So that is how arm's length range you need to derive. We will be going ahead with the practical aspect. I am just explaining here the theoretical part, right? Under practical aspect you will be able to understand that. Now what so how I have broken this entire thing. Now first is where data set consists of 6 or more entries. So as we saw under subrule 5, where the data set consists of 6 or more entries, an arm's length range beginning from the 35th percentile of the data set and ending on 65th percentile of the data set shall be constructed. I will teach you how to construct that arm's length range, right? Technically, this rule is applicable when you are using cup, RPM, CPM or TNMM and where there are more than 6 or more comparables in your data set, right? Then subrule 5 says that you need to ascertain the ALP for transaction whose price falls under the arm's length range. So if your margin, that is margin of your taxpayer, operating margin of your taxpayer entity falls under that particular arm's length range, then it will be considered at arm's length price, and when it does not falls under arm's length rate, then subrule 6 will be applied. I'll also open subrule 5. So if the price at which the international, so what subrule 5 says now, if the price at which the international transaction or specified domestic transaction has actually been undertaken is within the range referred to in subrule 4, that is 35th percentile and ending at 65th percentile. So if the price at which the international transaction or specified domestic transaction has actually been undertaken is within the range referred to in subrule 4, then the price at which such international transaction or the specified domestic transaction has actually been undertaken shall be deemed to be the arm's length price. If your margin falls under that arm's length range margin, then you will be considered at arm's length, right? This is what the understanding is of that particular provision. Then after, what subrule 6 says? Now subrule 6 says that if the price at which the international transaction or the specified domestic transaction has actually been undertaken is outside that arm's length range, that is the range of 35th to 65th percentile, then the arm's length price shall be taken to be the median of data set, that is the value lying on the 50th percentile of that data set. We will be computing the arm's length price in such scenarios as well in the practical part, right? Now so this is how the interpretation of subrule 4 needs to be done. Read with subrule 5 and subrule 6. I'll move to the next part which says about subrule 7. Now what subrule 7 says that first of all, subrule 7 is applicable when you are going ahead with PSM or other method, or in case of cups, because you saw that if in case of cup there are more than 6 entries, then you have to follow subrule 4, 5 and 6. But in case there is no provision which says about when there are less than 6 comparables in case of cups. So in case of cup also subrule 7 will be applied, right? Now what subrule 7 says, that the arm's length price shall be the arithmetical mean of all the values included in the data set, right? So now it's not in cup actually, it's actually everywhere only, that whenever there are cup, TNMM, CPM or RPM as well. Yes. So subrule 7 will be applied when there are less than 6 entries in the entire data set. I'm sorry, I just mentioned cup earlier, but cup, TNMM, CPM and RPM. So in all cases where there are less than 6 entries, then you have to go ahead and arrive at arithmetic mean for that particular case. Now in case of PSM and other method, there is no restriction of 6 or less than 6. There is no threshold or computation mechanism for more than 6 or less than 6. So in case of PSM and other method, you have to go ahead and compute the arm's length price by averaging out the list of that prices. I hope this clarifies. We are going to do the practical session on this entire part in the coming video. Alright, I'll catch you in the next video where I'm going to discuss the tolerance range, that is 92C2. Correct? I'll meet you in the next video. Thank you.